Welcome everyone to the Inclusive Fintech 50 virtual event series. As you can see, we have so much to talk about. We've already started talking even before the session has started. But today, the session that we have planned for you today is basically looking at platforms in Asia, opportunities, threats for inclusive fintech startups, focusing on the Asia Pacific region. And I think certainly when we look at fintech in general and the growth of platforms around the world, Asia really is at the center from the start of Alipay and WeChat Pay in China. Over the past decade, they've really shown us what's possible with the idea of becoming much more than just a payments platform or just a social chat platform, to become truly a lifestyle platform that incorporates a lot of different financial products and services. These kind of platforms, especially in places like China and India, have been integral for providing financial inclusion to literally billions of individuals and companies in different geographies around Asia. Today, during the next hour, we have a great panel lined up for us that will be going through what we see as the opportunities and threats, especially in the current context of COVID-19. Over the course of this hour, we'll dive into topics around the idea of platforms, how the idea of platforms have changed, the importance of data, and what we see for the future. Just housekeeping wise, please do remember that we are open for Q&A. So if you do have questions, please put them into the Q&A function, and those will be passed through to us, and we'll address as many of those as we can. If we don't have time to address your questions, some of us may be able to stick around after the session, or we will get back to you later on with answers to some of those questions. So you already know our panel, so I'm going to kind of skip through introductions, but dive right into it. And Geoffrey, I wanted to start with you. I mean, we're in a unique situation, obviously, with the pandemic, and especially what's happening in Asia. Now, the impact has been varied depending on the country. I mean, obviously, China was impacted quite heavily at the beginning and has recovered very rapidly. You have countries like Vietnam that have had 35 deaths to COVID. And then you have other countries like the Philippines that are really struggling to contain this situation. I mean, for us within the fintech space and more specifically around platforms, what do you think has changed, and what is the importance of platforms in this new normal that we're facing right now across Asia?
First of all, yes, our company Oriente focuses on Vietnam, Indonesia, and Philippines. So we have seen the difference in all three of those markets. When it comes to platforms in general, it's quite an interesting thing that's happened in Southeast Asia specifically. So I was one of the founders of Skype. So we were a platform for communications, and we were acquired by eBay, which is a platform as well. And when it comes to fintech, what's been very, very interesting to us is if you look at it, how did the first big wave of fintechs become these massive platforms? And that was because they attached themselves to another. So if you look at Alipay, if you look at what happened with Tencent, and if you see what's happened with eBay and PayPal, they attached themselves to a much bigger platform to kind of get that flywheel going. That's how all of them started. And then, of course, other fintechs kind of propagated from that. And in Southeast Asia, you didn't have the same kind of thing. So then you had kind of these ride-hailing companies like Grab and Gojek doing the same thing. So they kind of started to help create these platforms as well. So, I mean, obviously to get a platform, you have to have critical mass. And in fintech, it's even more important because you need to get a lot of data to be able to kind of offer these sort of products to your users. So, you know, for us, it's been a little different kind of how that roadmap has happened, because in the US and China, it was very, very clear. You attached yourself to a massive commerce company platform, and that would get the flywheel going. Here, it's been a little bit different. So, you know, for us, we now have 16 million downloads, 6 million customers. So we now have started to become a platform for ourselves where we do lending, we offer now insurance. Now we're also offering working capital to our SMEs, et cetera. And we attached ourselves, we work with JG Summit, the second biggest conglomerate in the Philippines, and Sinarmas in Indonesia. So platforms, no matter whether you do it the way it happened in the US, China, or Southeast Asia, every company needs to kind of strive to do that. And the more data you have, the more ability you have to offer other services, and that creates a platform not only for the people selling into your user base, but also for your user base as well.
It's a really interesting
point.
Yeah, I mean, how Alipay and WeChat leverage their existing properties. And so, I mean, on each of those properties, when they launched, they already had millions of users that they were able to then tie into the payment platforms.
And that was smart with Grab, and Gojek did the same thing. They realized a large platform to start. And that's why we also launched with, and our biggest investors are JG Summit in the Philippines and Sinarmas, because they have a very large user base as well.
Yeah, yeah, and that, I mean, when we look at Singapore over the past week, if you haven't been following the news, the digital bank license have been awarded, and Grab Singtel were one of the digital full bank licenses. And in our thinking, you know, having that massive customer base, although you know Singapore is only a country of a few million people, having that already existing customer base was really important. Ravi, I want to turn to you.
Yeah,
Well, I'll come back to you, Geoffrey, in just a second. I wanted to talk to Ravi about the India situation. I mean, Geoffrey kind of mapped out what happened in China and how that's different in Southeast Asia. I mean, tell us a little bit about how it's working in India for some of these platforms, and for yourself. I mean, what does critical mass look like, and how do we get to that in South Asia?
Sure. I echo what Geoffrey had alluded to, and but India is no different, and I'm seeing the patterns that is very similar to what transpired in China and of course in US as well. But then there's no one platform that everybody is gravitating. There are multiple such platforms, and you know, you have these consumer tech platforms focusing on e-commerce, or it's ride sharing like Ola or Uber, or it could be even food delivery like Swiggy and Zomato. And all of these guys have at least a few tens of millions of customers, and many of them are, you know, you can classify as underserved, underbanked as well. And that's one ecosystem that's emerging. Another one, I think government has done a phenomenal job, and they built what is called as India Stack, and then every citizen in India has now unique identifier. It's called Aadhaar ID. And then on the back of that infrastructure, there's something called UPI, Unified Payment Interface, and which is completely disrupted how payments are done in India. And then it's sort of given set the stage for you know, digital payments for everybody and anybody with minimal investment. So you and I think speaking of tailwinds in COVID scenario, and the contactless, you know, has really driven many guys to sort of embark on this platform. Now you see, you know, even a small enterprises sort of, you know, onboarding themselves onto this payment modality. And so you have this commerce or consumer tech platforms. You have this payment infrastructure players, you know, call it Phone Pay or a Google Pay or Amazon Pay. They have, each one claims they have access to close to about 100 million users that are active in a given month. And so now players such as us, pure play fintech guys, not only they have access to a few tens of millions, if not few hundreds of millions, and then to Geoffrey's point, the rich data that is associated with this audience on this platform, right? And traditionally, people, the big banks shied away from going after underserved and served in India is, you know, the cost of transaction, the cost of servicing this user in these deep rural areas is extremely cost prohibitive. And now this access and ability to understand the customer better and this whole tailwind that we are coming across in terms of people showing some affinity for contactless and digital payments, this all sort of, you know, lending itself well for new age fintech guys truly make a foray into underserved, right? Earlier, you know, it was just a you know, feel good statement, you know, we just go up there and speak about it in front of investors. But when rubber hits the road, it was a challenge. Now I think that you know, is being addressed by advent of these platforms. They are also having their focus on tier 2, tier 3 cities, underserved and served. So there's a fair bit of opportunity for synergizing with these players.
Very interesting. I mean, that concept in the India Stack is a great example of how the government can get involved and really enable the change. Fernanda, maybe I can come to you on this. I mean, you're obviously looking across multiple different markets, investing in a lot of different fintechs. I mean, that role of the government, I mean, maybe we can talk about that for a minute. I mean, if you look at what's happened in China, China was very much a wait and see approach to innovation. And I think in certain ways that worked very well. In certain ways, like peer-to-peer lending basically fell apart because there wasn't enough immediate regulation in place to handle that. And in the markets that you're looking across in the Asia Pacific, what is the role of the government and the regulators that you've seen? What have been the best practices for for enabling these platforms? Is it truly a wait and see approach? Is it a very prescriptive approach like Singapore or India? I mean, arguably both of those countries have done a lot to create a technology stack. Certainly Singapore is learning from India from that perspective.
So shall I add over here? So point is government or the regulators working over here is very much aligned to what a digitized economy would look like. So they have created already channels like, as mentioned by Ravi, UPI, then the digital stack or the India stack part of the thing. But adding to that, there's a lot of co-innovation which is happening with the startups or the fintechs and with the government. So there's one new initiative like which is being launched in government, let's say for India, which is a KYC sharing between an insurance company and a banking sector itself. So a bank, if they have done a KYC, the insurance company need not repeat the same. Okay, so they become a interoperability on that particular stack itself. Similarly, when they are working on the data, they are now building up something on consent-based data sharing platforms. Okay, so this is what government is aligning themselves so that they can create not only just a regulation around the things, but they are also enabling a product structure or a platform to enable or create a common platform for all the fintechs and other startups to build on top of it. So the business use cases are something which these institutions are kind of hopping on. The fintechs and the startups, they're hopping on, but at the same time, government is providing them a good lot of a platform support itself. And while they, so let's say in this year itself, RBI, Reserve Bank of India, has come up with a policy in the month of January about video KYC, how someone can actually open up a bank account or any of the credit liability or asset based both product while sitting at the home itself. Okay, just getting inspired from this thing, the SEBI as well as the IRDAI, they all came up on the same thing of allowing a video KYC kind of a solution where a person need not move outside, they can just be at home, complete the entire thing and have the complete access of the product. So they had the payment infrastructure, which is contactless and everything, but now they have made the onboarding as contactless, which is pretty new for the regulated environment. Even in the Singapore itself, when we talk about they only a couple of banks has a doing as a pilot phases itself, but in in India landscape, this has become grown wide. Now, if you want to open up a bank account, want an insurance, want any other liability or asset product, you just be at a just a call or a WhatsApp message away itself. Now, so I think it's always going to be a co-innovation because government is learning from us, like a good fintech startups who are trying to innovate and putting it as a platform for all other institutions to build on top of it. So that is what is happening in India at present.
That's a really good point. I mean, when you look at what's happened here in Singapore, I mean, if we look at something like real-time payments, I mean, real-time payments was set up by the government. They set up the basic functionality, but now it's kind of down to the private sector to implement the request to pay and all these other value-added services on top of that. Fernanda, I want to come to you. I mean, what are your thoughts around the government side of things? And then what are the specific areas within platforms that excite you in terms of the investments that you're making, specifically kind of towards the financial inclusion side of things?
Yeah, no, so I think the role of the government is fundamental, right? Especially in financial services that are highly regulated and do require a lot of support, both from the infra and what they can offer, but also support in terms of creating a systemically solid industry, right? Thinking about the client also. So super important. And we see very, very different approaches across Southeast Asia. Specifically, you've covered India already, which is a fantastic example. And so you see countries like Philippines that have always had a very progressive, I'll say, regulatory framework for financial inclusion in general in the region. Cambodia also. But it's very different in Vietnam, in Indonesia, very different in terms of what are the capital requirements you need to be able to provide digitally proper financial service offering. In your platform, you saw the licenses here in Singapore, $1 billion+ just for capital, right? Indonesia, around 100 million for you just to do online banking. These are much lower in other places, right? So there's a lot of constraints and things that the regulators definitely could help. And you can see how it's developing differently across the region, and how some are falling behind, right? Or taking too time to make the right investments and push forward. For us, the platforms, I mean, the importance of these platforms became even more relevant and large this year. You saw the numbers, especially in this region from Google Temasek Research, how there are much more users, right? 40 million new users only in Southeast Asia. Volumes, obviously, we saw with the lockdowns, ride hailing going down, but you saw e-commerce going 60%. And so people and financially excluded, like I'm talking on from the impact lenses, but used much more these platforms, right? Because of COVID, for various things and various needs in life. So they experimented in larger numbers, they liked it, and they're sticking with it, right? So obviously a lot of the respondents for this research specifically are saying we are going to continue to use the services we started. And for us, this is fantastic, right? It's a larger client base, is a engaged and a loyal client base that it's a fantastic and fertile ground for our portfolio companies that partner with these platforms. So we've seen specifically for financial inclusion and healthcare inclusion, our companies benefiting quite a bit from the new regulatory frameworks that we are seeing out there. Indonesia, for example, put like a new regulation that actually regulated broker companies needs to be distributing insurance digitally, right? So it's not anyone who can distribute insurance digitally. So invested in Pasar Police, alongside with Tokopedia, Gojek, Xiaomi, specifically to distribute like embedded insurance with this e-commerce, right? And of course, it's seeing a tremendous growth. And then when we think about platform and inclusion and the regulatory, I mean, we are not looking only at these large digital super apps like platforms here in Southeast Asia. A lot of our companies partner also with telcos, as well as WhatsApp became very important now. So our pharmacy chain in Kenya, now more than 5% of their volumes started going through WhatsApp, for example. And Fincare Bank in Bangalore, right? I mean, it now offers their digital banking through WhatsApp. Telcos, Lima, Jumo, that are distributors of insurance and credit and savings, Jumo Credit and Savings Marketplace, and Bima Insurance through the telcos, including feature phone. Also saw a surge in demand for telemedicine, 100% Bima during the COVID increase in the surge for demand. So yeah, so as we see those platforms becoming much more important, it's fantastic for our portfolio companies that primarily wants to partner with them, but it's also require that the government comes and actually support this development. Otherwise, either it becomes what you were talking earlier, like China, that gets completely out of control and there's a disaster for the end user, or they won't develop properly, right? So
yeah,
take off.
It makes a lot of sense. Geoffrey, I wanted to come back to you. I mean, Fernanda laid out quite a few of the business models and showing how partnerships and these platforms are coming together. I mean, one of the things that strikes me is that when you start with a platform model, there's quite a few challenges that are there. I mean, Grab, is getting to the point that it seems like it's starting to master that, but it's not profitable, and neither is Grab Financial. But you have companies like TransferWise that are just really focused on one thing and doing one thing very well. I mean, can you talk a little bit about the decision for kind of a best-in-breed solution like a TransferWise versus a platform? I mean, to my feeling, TransferWise profitable, growing very quickly. They're looking at adding on some very, very related services, but maybe 5 years down the line, they may end up add on lending because they'll have all of that data. I mean, which approach is the right one? And maybe you can talk a little bit about from Oriente's perspective. I mean, should you start off best of breed and then expand from there, or is the platform approach the right way to go from the get-go?
I mean, so as I told you before, Tavit, who's founder of TransferWise, used to work for me at Skype, so I'm biased to how they're doing things, of course. But I think it's important to understand two things. Like, if you're a startup, if you're just beginning, you need to solve a problem. That is the point. You have to solve a problem. It's very hard to start as a platform because to get just from with no users, because you have to kind of then gather users, and if you don't have anything to offer, it's very, very hard to do that. So how TransferWise did it is solving a problem is the best way to do that. Now, if you look at Grab and Gojek, they had the opposite. They had no product, but they had a large user base. So like that works kind of for them. The thing that I find interesting about this as we go forward with these platforms is, in the old days, again, if you go back to how PayPal grew and the first wave of fintech, the reality is they went very, 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 very slowly. They went from just offering payments, and it took a long time for PayPal or even for Alipay to start offering other services. Right now, people are doing already, as has been pointed out already, all kinds of different financial services products are being put out there right now. And those things take a lot of data. So the one thing you look at when you look at a Grab or a Gojek or someone like that, they have a huge, or even a WhatsApp, they have a huge amount of distribution. But how much real data do they have on their users? What can they really offer them? What does Grab know about the end user? The answer is very, very little. So, I mean, that's a very, very different thing. So they have the distribution, but it's like, what kind of services can you offer on top of them? So when people talk about platforms, oh, I have this massive platform, it's like, but how much data do you have on that platform to understand the user and offer them what they want? That's a very, very different thing. So I think that's kind of an important component to have as well. So, you know, if you're like a TransferWise, you're solving a problem for a person, that's the way to do it as a startup. And if you're Grab or your WhatsApp, you have a massive distribution chain. So what you do is you offer something that leverages that, but doesn't need a kind of high, heavy lifting data or kind of infrastructure things that kind of offer that service, if that makes any sense.
It does, it does. I mean, just going back to your PayPal example, I'll come to you in just a second, Ravi. I want to ask you a similar question around this, but I mean, PayPal strikes me as a fintech that had all of the opportunities in the world, but failed to capitalize on 95% of them. Now, granted, the 5% they did capitalize, they're doing very well on the back of that, but you know, they had to buy Venmo, they had to buy Honey. You know, we know about their travails in places like China. I mean, Geoffrey, you mentioned, I mean, why were they not able to capitalize on that? Is it a question of they just didn't want to, or the talent, or the strategic direction?
Well, I mean, I was, my company, Skype, and I was in charge of the, you know, the acquisition. Were acquired by eBay and PayPal. So I saw this up close and personal. Because the idea for them first was the concept that you'd be able to sell all kinds of other services was just a pipe dream. I mean, at the end of the day, they were using PayPal to kind of drive transactions with eBay. That was the real driver for them. It wasn't sort of, you know, to do all these other things almost unimaginable. So, I mean, again, like you said, they got 5% right. That's pretty darn good. They got that. They couldn't possibly have imagined this other 95%. I think that's a very big thing. And the second part is, if you look at who got it right, well, Alipay got it right much faster. Well, one of the major reasons for that was that they didn't have to disrupt anything because there was not a financial services sector that really took care of the masses in China. Where when you're sitting in, you know, the U.S., you're taking on at the time General Electric, or you're taking on, you know, Bank of America, et cetera. That was something that was even highly unimaginable for a company to do. So I think that's a major reason for it. I mean, look, they come out the other side well, and as you pointed out, they had to acquire people, but you know what? At least they were smart enough to acquire people and not let those things go by. That's for sure.
Yeah, that's true. Ravi, I see you nodding your head. I mean, how does you agree with what Geoffrey said on this?
I agree with most of what Geoffrey said. And going back to the platform play into financial services, right? And let's face it, not everybody can pull off what Alibaba did in terms of Ant Financials, right? And everybody has the dream, and that's what they set out to do. And speaking from my own experience, when I was a CTO at Flipkart, largest e-commerce platform, we had close to about 150 million user base. You know, a good 40% of that is active customer base, right? And next thing you know, we wanted to have a standalone fintech entity feeding off of this platform. And then we wanted to make a foray into lending, insurance, retail wealth management for these customers. And I think, you know, you can easily lose the plot if you sort of be very outlandish and, you know, sort of, you know, go with this multi-pronged approach. And Geoffrey made very important point. All these platforms are great. They have a tremendous distribution, right? When rubber hits the road, you really need to understand what sort of data understanding you have about these customers, right? It's not that these guys can't get hold of data, but that orientation was missing. They're very transactional in nature. You know, e-commerce, they only focused on commerce, and then whatever data that is associated to drive commerce, they captured that. They did a good job in terms of personalization, delivering that you know, beautiful experience for the customer. But you know, there are other you know, signals that you need to sort of be aware for you to be able to do a bang-up job when it comes to providing lending solutions or insurance solutions, right? Then they quickly realize, holy cow, we don't have that, right? And then it's very underwhelming offering, right? And then so what we noticed and what we've seen being reasonably a successful formula is be very immersive in your approach, right? Meaning, if you are an e-commerce guy, what is one problem you want to solve? I want to go after underserved or people who have not been able to get on my platform and do commerce, right? Why is that? Affordability is an issue. These are the guys probably credit worthy. The bureaus have not done a good job in terms of assessing their credit worthiness for want of many things, right? Now they are on our platform and they are not able to afford some of the products that we are offering. So can we actually help the financial services, the financial institutions, whether the banks or NBFCs, with our data advantage and access to these customers, underwrite them better, get them a credit line so they'll be able to buy products that they couldn't afford in the past, right? That's very symbiotic in nature. I think Flipkart wins or any commerce platform wins. Customer is inclusive here in terms of financial services. And then the banks and NBFCs have access to customer segment that they never had access before, right? For want of, you know, reach or even data understanding. So similarly, when you're talking of insurance, you know, you have to be, you know, very contextual, right? You know, if somebody, you know, a pregnant lady is buying some stuff and, you know, on our a platform, and you have enough signals to notice that, and then sort of, you know, you come up with some health insurance product for the new member in the family. So the point I'm making is sort of take advantage of your context and whatever understanding of data, and then sort of work with the best in class players, right? Versus, you know, you wanting to do everything yourself is the, you know, recipe for success, right? You know, the many people to begin with will say, like, you know, oh, we'll take an NBFC banking license ourselves, right? We'll go for an insurance license ourselves, and we have all this data and reach. Or data is you know, your new currency, and that is my asset, so I don't want to part with anybody. So they have this you know, idea to begin with, and they're a little predictive, and then start to make a play on their own, and then the offering that comes out is very underwhelming. But fast forward now, those are the lessons learned. Now they're very open, right? They're working with they're truly saying, we are a platform, we have access to customers, we have certain data understanding, let's come together, let's do some data room exercise and say what more we need about the customer. We will instrument all of that stuff. Now you are good at product creation, product innovation. Maybe I'll give you some input. Let's co-create new set of products that are more amenable for the segment that I have on my platform. And then I have the distribution thing, right? And now together, it's a win-win construct, right? So that's how I see this whole thing evolving, and I think that's the way to go. And of course, I know at some point you'll bring up that is not to say you know, there's no platform play if you for a fintech player, a native platform play for fintech players. There's some who are focusing on doing that, but to Geoffrey's point, to build a platform and they want it's a huge challenge, and it requires a lot of dollars, you know, and if you have to spend few hundreds of millions of dollars for you to get to even a few million user base, right? But there's some doing, because even the platform that I alluded to, up until recently, their focus has been tier 1, tier 2. Although they say we are going into tier 3 and tier 4 cities, they haven't reached that. Now, speaking of financial inclusion, that's what my startup does. The segment that I want to focus don't even exist on these platforms as of now, right? and it's work in progress. Yes, the digital payments and all that stuff are sort of accelerating that reach, but it's work in progress, right? So the folks like us have to seed some investments to build a platform that bring this audience onto a platform that I'm creating. So there are unconventional approaches. We have these NGOs, right? They have reached to these self-help groups and so on and so forth. They do it in a very archaic, in a non-tech way. We're creating a platform to onboard them so they do their job better. In the process, we have a good enough critical mass of underserved segment, and then we go and offers financial services. Yeah. So I think it's work in progress. It's evolving, and I think it's exciting to see what will unfold in future with all this stuff in place.
Yeah.
So,
oh, sorry. Go ahead.
Yeah. Yeah. So just kind of summarizing of what Ravi said. Here, there are a lot of companies who are working in order to create a kind of a co-innovative products with the banks and with such platform, existing platform like the kinds of WhatsApp Pay, Phone Pay, and other institutions who have been capturing the different set of alternative data. Okay, now these institutions or these startups, what they are working on, capturing all this alternative data and create a interoperability in terms of data sharing. Okay, and that is what is gonna lead to a new generation lead products itself, and how we are talking about, let's say, underbanked people. So the underbanked people cases, there's two recent developments, which is one from the government initiative called Sehmati. So Sehmati is a in English it means consensus. So consensus is a platform which is actually enabling all the PII as well as the bank generated data being made shareable on a any of the financial information user or a financial fiduciary. So in that particular case, it become quick and easy for any other institution to build a business use case on top of it, whether it may be talking about providing an instant microfinance, or whether it may be providing an early salary or other kind of a thing itself, or even for an operations loan or something like that. At the same time, there are people, because e-commerce and other institutions, let's say in India, captures not more than 8 to 9% of the entire population. But there are institutions who have been working on much wider landscape, like a telecom data or a utility data. A telecom data is in India captures more than 900 million users. Okay, so people have been building a product for underbanked, underserved people, where this alternative data for based on the telecom, which talks about their usage, your past, credit worthiness based on to what a telecom captures as a data. There are more than 2,200 different data points they do, and make it shareable. And thanks to the regulation, which is shaping up at the same time to make it possible, because in India there's Data Empowerment and Protection Act, and other things are coming in. Is a you can say an alternative for India GDPR, which is rolling in. So all these things are coming together to make a ecosystem where we can talk about how underbanked or underserved population, which does not have a CIBIL score or a proper credit score, and can be served or can be brought to the financial inclusion with those methods. So it really need not at present days to have a platform like as big as WhatsApp Pay or Google Pay or a Flipkart or a Phone Pay to be there. There are institutions who are creating this platform small enough, but able to connect all the dots to make this possible. And they are just kind of co-innovating with them and bringing an interoperability with these platforms itself. So this is a new gen we are talking about. And since we have been working in this stream, so I can say that we have actually profiled more than 780 million people alone in India, to whom we are talking about, let's say, a use case related to farmer loans or underwritings in terms of microfinance. Okay, and that is being made possible with just connecting all these alternative data and making it shareable with each other. So yeah, things are taking in a different perspective, that you need not to be big to make it big. So that is something is happening around.
Yeah, and sorry, that's a great transition into looking at customer data. And I mean, one of the regulations that stands out was the Australia's CDR, I guess, customer data rights, where they basically said that individuals should have control over their data. Fernanda, let's talk about the data a little bit more. I mean, in certain ways, data, the trite saying, data is the new oil. And I'm sure in most of the investments that you're looking at, data is a critical part of that. But it also has risks around that as well. So Fernanda, I mean, from LeapFrog's perspective, how do you balance that? I mean, are you concerned about the data privacy, or is it the fact that in so many of the markets like Singapore, like India, like Australia, the open banking regulation is starting to open up such that you're able to access that data with customer consent? How does that fit into your focuses?
So, just to add
sorry,
over,
I was speaking to Fernanda.
Sorry.
Yeah.
Saurabh. So data is crucial, right, for what we do. I mean, we want to distribute healthcare and financial services in a tailored way and in an affordable way. And the only way to do that is collecting data, processing it, and then using it right at the point to delight the client, to provide that customer experience and also meaningful products for them. So it is exciting to see data being collected. We are obviously very careful about it, and when we enter into portfolio companies or doing due diligence, there is specific due diligence to see how they deal with data, with IT, but also thinking through the policies and the processes in place. We obviously, as an impact investment firm, we are very deep in customer protection principles. So it's not only from what product you offer all the way on how you collect, but also what do you do with the data, right? So we have in our framework, when we analyze and measure impact, especially for digital businesses, which are quite a few of our portfolio companies now, we have a specific session to do and look deeply into it. So they cannot only just comply with the law, right? So that we have another set of standards that we expect the companies to be truly implementing, living, and dealing with.
Interesting that. I mean, Geoffrey, coming back to you on this, and can you talk a little bit about consumer consent? Because I mean, we've done studies in China, and we found that in certain cases where people had to give up a lot of data, as long as they were getting a benefit from it, they were open to giving up that data. Can you talk a little bit about what Oriente's experience is in that, and as well, maybe we can transition a little bit into what the demands from the market are. I mean, as Fernanda and Saurabh kind of hinted to, there's a lot of regulation coming down the line, but a lot of sensitivity around that as well. Can you talk to a little bit about what you've seen in your customer base, both in terms of their demands and how data can meet those demands and how comfortable they are in giving up that data?
You and Fernanda hit it like completely right. So the issue is this. So in the US, for example, if you're going to be put into a hospital, let's say you're sick, right? What's happening? People are pulling your credit score and seeing that you're a terrible credit risk. So they don't want to put you in the hospital, right? So like this has gone way too far. But on the other hand, if you're a Filipino, your dream is to have a credit bureau, because the reality is you're paying 15% a month because you don't have any data on yourself. So the biggest issue that I have when I come to these things, looking at it, is like, it's not one size fits all. So sometimes if you look at, say, like Indonesia's policy, it's very, very strict on data usage, but it's like they're kind of taking almost like an Australian approach. Well, Indonesia is not Australia from a financial services infrastructure perspective. So I think this is one of the biggest issues that is out there, is that the concept of like having your data work for you versus having your data work against you. And it's very, very different between what markets you're in. And I find that to be, quite frustrating in this regard. And again, like, from what my portfolio company, the Atomico, which which we worked with, going back to Skype, it's all very different kind of how the regulatory approach is here. I've seen the Philippines to be very, very helpful in this regard when it comes to data and whatnot. And that's because the biggest lender in the Philippines to consumers is Cebuana, which is a pawn shop. I mean, that's like literally the biggest lender per person, and your mother-in-law, those two people. So the reality is a very, very different kind of situation, right? So I think that's a part when we talk about data privacy. It's like, we got to understand is this data helping you or is it hurting you? And that's the biggest issue for us to deal with.
Yeah, yeah. In certain ways, I mean, all of us are sitting here with phones in front of us, and we've given up a tremendous amount of data from that. I mean, my phone has a Chinese SIM and a Singapore SIM, and I'm American, so probably at any point the NSA, the Chinese equivalent, and the Singaporean equivalent can find me. But I've made that choice because it's so convenient to use that. Ravi, I mean, maybe talk a little bit about how does that vary in India? Is it similar to China in terms of that people are willing to give that up, and what do you see around data privacy there?
Yeah, so I know there's a lot of policy making that's transpiring as we speak, and especially in the last 2 years or so. I think that the focus largely, I'm being very upfront and say a few things maybe politically incorrect as well. I think the government focus right now is more around data colonization and making sure that data doesn't go outside India, and some of these foreign players coming in and looking at various products and services, and you never know how they will put this data to use about the vast consumer base that we have here. I think a little bit of a protectionism, and rightfully so. And they don't want a UK moment or something. There's no a PayPal or Alipay or XYZ that came out of UK. I don't want to take any dig. I mean, it's not like there are no smart people around. They kind of missed that whole thing, and the entire the European data is lying elsewhere, and not many innovations coming there, and there's a little bit of protectionism that is at play. But otherwise, if you're a native company, you want to go after user data, yes, there is a good infrastructure. In fact, I want to bring up this topic. There's something called OCEN. It's called Open Credit Enablement Network. It's almost like an API, right? That will bring lenders and consumers together onto one platform. And the real critical piece in this platform is basically the government has instituted what is called AA, account aggregators. So these are licensed by Reserve Bank of India. They're saying, account aggregator, your job is to basically go after a few tens of millions of users that you have in India, right? And then on their behalf, collect whatever data that you can collect, whether it's their bank statements, if they are small enterprises, goods and service tax, and if they have other, IT returns, whatever data sources, right? Put them in some data vault, and then, and then offer this to any lender with the user's consent, right? Now, lender doesn't have to go and fetch all this data himself, right? So now, once this infrastructure is in place, and now Flipkart and Amazon who have a distribution, they can actually plug this API, and suddenly you have 10 lenders who are looking at this data, and behind the scenes they are cranking their underwriting algorithms, and then consumer has the best price point, and he can pick and choose whatever is more amenable for us, right? So I think they're very progressive in that regard, right? Barring that data colonization, there's some concerns around how the data leaks outside of India. But within India, there's a very balanced approach in terms of getting users to give consent, and then consolidating all that in the form of account aggregators, and getting the lending service providers access it at a click of a button through API call, and then a consumer has a rich choices from our service providers, right? So I thought that is very progressive in their thinking, and we are heading in the right direction.
But I mean, just sticking with you, Ravi, for a second, I mean, isn't that a risk for fintechs? I mean, one of the reasons that these platforms like, well, the digital banks in China, as an example, WeBank and MyBank have been so successful is because the credit system is really just, the nationalized credit system was not particularly robust in China. So these guys were able to collect that alternative data and act on it. Once we create this central, I mean, you talked about the open credit enablement network. I mean, once that's in place, won't that, if you're a Flipkart, I mean, you've got lots of other stuff going on that's driving your revenue. But if your revenue is trying to identify, underserved borrowers, either retail or SME, wouldn't you potentially then lose some of that market? Because now all of a sudden you have a central credit database that's very effectively and efficiently providing this information to players like Flipkart that mean that you're no longer able to offer that. I mean, for fintechs themselves, isn't that a risk?
Yeah, so yeah, a very good point. That's active debate for all of us playing, right? While consumer has a rich choices, it's hugely beneficial for consumer. Now, there's no information asymmetry or a data asymmetry. Every lender will have access to the same data that XYZ has when it fully evolves. But I think that's where the platform or a service providers such as us need to sort of innovate more on the core capabilities, right? Having access to data is one thing. What you make of the data, right? And how effectively you can underwrite, right? And there is an art and science there as well. And then the servicing the loan, how well you do the collections and how well you onboard the customer. There are other aspects of that, right? If you look at entire, I'm speaking to lending per se here, not necessarily all the financial service products. It's identifying a customer and being able to reach the customer at scale, especially the last mile underserved folks. The platform still has a role to play because they already have a reach to those guys. Then if you can provide frictionless onboarding experience on your platform, right? Today, it's like pulling your teeth if you have to go to the bank and get yourself even an account open, right? Let alone getting a loan, right? And it can take few months, if not a few years, unfortunately. Now, if you can make it, a click of a button, and then you have a loan product delivered and automatically disbursed into a bank account, that's a great experience. Then even before you disburse, you have to bring your own secret sauce in terms of how well you underwrite, right? And that's still your IP. And I don't think you can democratize that. And that's that. And then, of course, servicing the loan, right? So this is what we need to focus. To your point, right? Yes, that part, the data part is being democratized, but there are other aspects where you need to innovate and in order to differentiate yourself.
That makes a lot of sense. Just a quick administrative note to the audience. I mean, we've got about 10 or 15 minutes left here. If you do have questions, please do submit them and we're happy to go through them. We've gotten a couple through that we've gone through, but now for the last bit of this panel, I mean, we've talked about platforms in general, we've talked about data, we've talked about the role of that. Fernanda, I want to come to you. I mean, what isn't working today? I mean, what is not being addressed by the market today, and where the opportunity is for not just platform players, but within this financial inclusion space, where do you see the opportunity?
And Geoffrey and Ravi mentioned a couple of very interesting points related to that. So, oops, sorry, so I think what is missing is kind of the deep expertise, and what Ravi was saying. For me, would be maybe like three things, right? One is, are these platforms thinking deeply, right, and investing deeply behind having those consumer insights to understand the user, especially the excluded or the emerging consumers, right? Are they really investing and thinking through the needs of her as a client as well as the family, right, over a life cycle? I just haven't seen much of that in many of the players. And so we did this deep understanding. I mean, it has to be, it's not a quick fix, right? It's something that has to start from shareholders, board, CEO, and be completely embedded into what the company does. So thinking about that deeply and offering, right, products that are affordable. They're thinking constantly about affordability and is this the best deal in town? Thinking about if you're offering, for example, let's pick a loan. I mean, it could be a savings, pensions, payments, or anything. But if you're offering a loan, is this product really going to change the life of this person, be meaningful to her? Are you considering a loan that she can pay, taking into consideration the cash flow that needs to be generated to pay this loan? Are you collecting properly? Are you describing the product properly, right, in simple terms, so it can be understood on a digital platform quickly, and also on. So just thinking about this offering, and also, thinking about beyond one single product that has a fantastic LTV to CAC, which is loans, right? And we see a lot of consumption loans out there, which is great, right? Creates that revenue, and the bottom line we also need to make those platforms sustainable. But that's not enough. That is not really the real need of that household or that business. So expanding this product offering. So this is like deep insights and thinking broadly about product and the offering, right, over a long period of time. The second one is really the experience, right? If you are a sari-sari store owner in Philippines, a warung in Indonesia, and you have, your experience of internet and online is Facebook, and it's free, right? Why would you do anything different than that for your financial services and other things and so on? So creating that experience and building in the trust, right? I mean, we're seeing this tremendous engagement and loyalty with these clients. These clients are doing actually real transactions with high dollar amount for them at all levels in those. So there's a very high level of trust. So building on that, but you need to deliver the experience. The other thing it's to do with more where we are stand for, which is a bit more financial literacy, right? So and kind of building on this human interaction. I think in our portfolio company, even if you think of Lima, way back when it was set up, operating in Bangladesh and Ghana, right, doubling the insurance penetration in those countries, just selling insurance, microinsurance to feature phones. I mean, the role of an agent was very, very important. So it was not only about just the online and the digital. I mean, there was the need for explaining a new product and giving that comfort. And now we can do video, right? Everybody does video conferencing on the phones, regardless of socioeconomic status. And so seeing more of that financial literacy and this human interaction through the apps, but really educating and explaining products. So I think if those three components, there are fantastic companies doing that, and then we invested in some of them and are very proud of it. But we should see more of that. And then to see the platforms really doing it is this deep specialization of the product that I think Ravi touched upon, and so really thinking about that deeply and partnering, right? I mean, there's no point in inventing everything. There are plenty of people like LeapFrog, like Axion, who have been doing that for 10, 20 years. So why not build into these consumer insights that we all have built over the years, right? With a lot of pain and sweat and so on, and just attaching those to those platforms in a smart way that benefits everybody. All these platforms need to monetize, right? One of the things that we love about what's going on is that not only they have more users, they are more engaged, spend more hours online, but they are sticky. These platforms really need income, revenue, right? And financial services, healthcare services could be a big driver of that if they're smart in implementing it and partnering with the right folks.
Yeah, that's really interesting. I mean, to Ravi's point, I mean, it's sticking at what you're good at, but at the same time, thinking broadly about where you could be going in the future. Saurabh, let me, a similar question, but slightly different angle. I mean, when you look back, well, March or April, when the pandemic was really starting to kick in, what is the one thing that you feel you were missing in your business, or something that you feel you weren't ready for, that you wish you were ready for, that you're looking at implementing now? Did you feel like there was something that would have really helped you to address some of the current concerns of the financially excluded that you didn't have at the time?
So to the the answer to the question is when we take a step back, like let's say 3 years back, neither the regulation was around to support the infrastructure which we are trying to build, okay, and nor there was any such initiative which is being taken up by the at an enterprise level. But and these things were specific to the regulation around of how the data sharing, how the consent as a service need to be managed from a user standpoint as well as the enterprise standpoint, okay, and multiple other things added to that. But when we are talking about 2020 or late 2019, we have seen a very big shift, even for us as well as for the entire ecosystem. Here we are talking about now the regulations has been supporting of what we are doing. So a recent case I'll just share with you. It is just a 2 weeks back kind of a case. We have been working with Temasek Holdings, and with Temasek Holdings, they have come up with a almost like a $80 million plan for investing in India, which is related to kind of redevelopment for the people who are blue collar job people and have lost their job during this COVID times and all the stuff. So they are using our blockchain infrastructure to making them enable with not only just the job standpoint, but also able to assess them and, kind of provide them different financial products. Okay, so I think now enterprise has been moving in that direction. Even we are partnered with through TCS to Experian global account, where Experian is using a blockchain infrastructure to manage the consent of the user as a consent as a service, and also consume different alternative data point instead of storing that data point which they earlier used to do. So they are bringing a real-time interoperability in terms of where, let's say, institution, an e-commerce platform or a telecom or a utility platform, where they need to store a data and bring that data closely to each other. Now they are able to kind of source it in a real time, create assessment, and on click with a user provided business use cases, they can enable them for that assessment itself. And this is working pretty good for them. And we are going to see by 2021 a new age where we are talking about new products being introduced to the market, a product which is not only just serving the need of the user or the consumer, but also helping them build their profile for a better ecosystem, where we are talking about even if I'm using let's say paying for my electricity bill and paying it on time, I'm getting benefited on a credit grounds itself, which is so far are being underparked or are not being considered even as a good behavior or consumer behavior to be considered while doing this thing. But again, as Geoffrey mentioned, that data working for the user or data working against for the user, that is something we as an institution have also already realized that thing. And that's why we are taking the power of the data to the hands of the user and providing them consent as a service architecture itself. So the user would actually be enabled to know whether they want to look into this particular direction, or whether they want their data to be activated for this particular use case or a business use case or a offering which is made to them, or whether they want it to be set silent. Okay, so we are taking the control away from the enterprise of how they have been managing the data on rather making it more interoperable or consumer driven of when they want it to be activated and work for them.
That makes a lot of sense. I mean, that consumer consent is a critical part. Geoffrey, we lost you there for a minute, but the question that I was posing before was, when you look back, what do you wish you had in your business model when the pandemic was really hitting in March or April that wasn't there? Do you feel like there was something that was missing, and what are you doing to kind of address that? Maybe we've got about 2 minutes left. We'll finish on this question for the
yeah, we had a lot of offline touch points. That wasn't very helpful, I can tell you that, especially in the Philippines and Indonesia. That was the biggest issue. But I mean, look, I think also the pandemic, one of our investors pointed out to us, or one of the big conglomerates said, the difference between being Afterpay or Klarna in the developed world is that the government is bailing out the businesses. In the markets that we're in, the businesses are bailing out the government. So it's a very, very different situation. They don't have the same kind of backstop that's happened other places, right? So for us, it's been just making sure you're more focused on exactly what the needs are of the customer, and that's it. And trying to get through it, where you've seen Klarna and Afterpay really accelerate, for example. And in our markets, it's been a little bit, you've had e-commerce accelerate, but it's there's been a bit of more deterioration, we think, in the overall credit for the actual consumer in these markets, because they're not getting stimulus checks.
Yeah, and I think there's still a lot to be seen around the buy now, pay later. I mean, there's a lot around Klarna and Afterpay in Australia. Australians love to pick apart their financial industry, so I think there's more story to be told on that. Great. I mean, this has been a fantastic session. It's always a good sign when I learn something about that, and with the expertise that we had on this line, and this was really good. There were some additional questions that came through in the background. I think we might be able to stay on and address some of those. I have to drop, but Abby might be able to pick up and answer some of those. But thank you so much to the panelists. Thank you for everyone who attended. I hope you found it very interesting. I think, for any of the panelists that are here, please do reach out to them through LinkedIn or whatever other forms of communication. Thank you again for the time, and hope you all found it valuable.
Thank you, Zen.
Thank you, guys. Thank you all.
Thank you. Thanks.
Thank you.
Take care.
And Abby, should we pick up the other questions, or how do you want to?
Yeah, we can.
Okay, there were a couple of additional questions that came through, kind of related to some of the previous conversation that we had. So on several of the use cases that were mentioned before regarding platforms that aggregate data from multiple sources and extend services based on that, were the initiatives government or purely private driven? I mean, I think we've talked about that in a couple of jurisdictions, at least where, like in Singapore and India, it's really government driven. Maybe Geoffrey, can you comment on the rest of Southeast Asia, kind of what you've seen in terms of private versus public driven around sharing data?
Just in general, I mean, the government, like I said, like the governments in Philippines are very, very open to all kinds of things. So they want net inflows of capital, right? I mean, we're launching a bank in the Philippines, and it's like a neobank. There's a lot of people trying to get into that. You know what I mean? So where like in Singapore, there's a ton of demand to get that license. There's not the same demand in the Philippines. So we've seen it's very different depending on the markets. And it's being driven by how much, I think, demand there is from the private sector.
Yeah. I mean, just in my mind, I mean, what seems to be working as a public effort around the infrastructure and then a private innovation on top of that.
Completely agree.
It provides the trust. I mean, the second part of that question is the person who asked was wondering if if there's no government push, can you actually trust the platforms to handle the data correctly and to share the data correctly? That may or may not.
The answer is no. The answer always is no. Even though we're entrepreneurs, the answer is always no.
Please check your Facebook account for proof. Yeah, so I think certainly the government provides a little bit of trust around that. The other question we had was, and maybe Fernanda, you can start off on this, and Saurabh, you can make some comments. What types of partnerships are possible between super platforms and early stage fintechs to serve the underserved? I mean, given the fintech's relationship with communities and offerings, what kind of partnerships are you seeing in that?
Okay, so when it comes to super platform or the platforms attaining a singularity altogether. So in this particular case, we are talking about a fintech. There are certain regulation which need to be fulfilled in terms of when it came to user onboarding. When we are talking about a regulated product. Okay, so that fintech can actually enable those technology stack to make it possible. So in terms of user onboarding as the process is quite a complicated and a detailed one, and it has multiple of a compliances level when it comes to any of, let's say, RBI or a SEBI or any other a bank driven product itself. So that is one thing which which fintech can enable for super apps. We have been doing it for WhatsApp and Amazon Pay and Google Pay. So this is pretty amazing. Being a small company, we're able to serve those magnitude of clients. Second is that that these institutions, they have they have a lot of data, but not everyone is being focused of what to make a business use case out of it. If you have a very a kind of well vetted business use case and a good partnership with the financial institutions, it can be really turned into a magic. So we have really enabled those cases or seen institutions like fintech enabling those cases where we are talking about enabling a new product. Let's say there's a new product which is being introduced by Airport Authority of India, where they're providing a virtual cards. Again, a fintech product, but being with a good partnership and all, they are going to capture more than 220 million domestic air travelers in India. And this, we are talking about a year turnover of more than $2.5 billion. So, a small fintechs has to have a good deep down expertise and knowledge of what the industry really wants or what the end consumer can have a real advantage, and then they can surely be able to make it big. And it does not require just only a good tech and all, but it requires a good understanding of what these big institutions or super apps are really missing out in that case.
I think, I mean, to complement that, not only infra and KYC and other things, but for us, we are all about the delivery of these essential health and financial services and tools, right? So we look more from the perspective of partnership of how can we and ideally meet our goals of so for us, what we are seeing, is the likes of Passar Police, which is a regulated distributor of insurance attached to Gojek, to Tokopedia, and 20 other platforms distributing all sorts of insurance, like healthcare, general, and so on. We see with telcos, right, with the Lima and Jumo, so delivering telemedicine, health care, insurance, Jumo, the savings, it's a marketplace for loans, and all of them are growing quite fast, especially this year. And then using the WhatsApp, right, for not only top line revenue, but better servicing and low cost. So Good Life pharmacies, for example, in Africa, using WhatsApp, right, to do their part of the e-commerce and enable sales in our areas because of the lockdown, and just people used it, as I mentioned. So they tried it over COVID and lockdown, they liked it, and they stick to it, right? So so these becoming much more relevant. And Fintech I mentioned also, like Bangalore Bank using WhatsApp, doing everything digitally. I mean, did tremendously and acquired a lot of more bank accounts over this year because people just were pushed towards using their digital, and they are partnering with WhatsApp to make it more better experience for customer, again attaching and trying to make the experience of digital experience closer to what they do on their day-to-day life, which is WhatsApp, which is Facebook in other parts of the world, and so on.
Yeah, great. Thank you so much both. I think we'll end the recording here, but it's been very, very useful. Thanks again, Fernanda, Saurabh, Geoffrey.
Thank you for moderating so well. Thank you.
Thank you.
Bye-bye.